All right, good afternoon or good evening. Today is Friday, July 28, 2023. So we are doing a end of day review for today. And what a surprise, right? What a day today. After a huge down move yesterday, and we can see that it recovered almost, 80%, I would say, if you look at the 1 hour time frame right here. 1 hour time frame. Where is the 1 hour time frame? You see right there? You see this down move, huge down move, and it recover almost 80%. Look at that. Yep. So this is a bearish order block, and it come back to retest that order block, or this bearish breaker also. You see. Let's see. It's a huge down move, right? Let's see. So 50%, you want a retracement around 50%, but here you say, I think it's around here, roughly, right? 75%. Yeah, I believe 80%, 85% right there. So it's it's not quite sure a retracement at all, so we have to see. One thing we really want to see in liquidity run or price action is that we want it to break this down move, either go here, take out the buy side liquidity, and then continue to go down, or come out here with a strong move and leave a fair value gap and go back, retest the gap, and continue the uptrend right there. That's what we want to see next week. But you remember, next week will be in first week of August, and July is a big month because earning, not lots of earning from financial sector and tech sectors. I think Nvidia is not earning until second week, or I have to check, but I think it's about maybe second week of August. So Nvidia is a tech company, but its earning cap late as compared to other tech company like Microsoft, Apple. They all come out on July, the month of July. Okay, I just want to follow up what we discussed this morning on our first hour trading. Remember that we did take a real trade yesterday already, so today it's just a day that we are practice. We pretend that we take a trade. You remember what we try to take a trade right here, right? Because the setup is formed right here, right? Buy side liquidity tokens. Then you have auto block, you have fair value gap, and you have retest right there. And then we are entry right here. I remember we entry somewhere around here. Right, let's take a look at the screenshot that we check. So here's the screenshot we check at that moment. So 10:31. 10:31. So we're going at 10:31. The idea is stay there. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10:31. 10 Here's our node right there, right? Or we should say right there a short setup. So we have buy side, sell side liquidity, buy side liquidity rate, and then we have sell side liquidity rate right there. Yeah, when you have a sell side liquidity rate, it's not good for you to go short. However, if you go short, then it's gonna be a very quick trade. Maybe go into here a little bit too much, but go check out this liquidity will be much better target for us. And that's exactly what happened. Look, you see, it got out, it take the liquidity, sell side liquidity right there from the previous or prior swing low right there. It didn't reach the 930 as we anticipate. So that means we learn the feedback from the markets, from algo, that it's not gonna check 930. It's not gonna go down to 930. It's just intermediate if we check our liquidity from here, because so many what at that moment. The buy side liquidity up here is more than the sell side, so it could run into where it have liquidity the most. So because algorithm is programmed to maximize transaction, which is where I have more liquidity, and we only have two kinds of liquidity, right? So buy side liquidity and sell side liquidity. The buy side liquidity is for one who short up, and the stop loss is like buy side liquidity. And sell side liquidity for those who long, and the stop loss is gonna be a sell side liquidity. So when the price go down, it will trigger the order, right? So basically, the stop order will become a market order for the people who short them, and vice versa. So if we look carefully, we can see right here the pattern, right here. Okay, if we good stop loss around the fair value gap, we got stop out here. However, if we put the stop loss right above the order block, then we didn't get stop out at the 1034. Then we have a decent move right here, decent target right there, but we have to make sure we set the right target right here, and we get our trade. Otherwise, we get in big trouble right here, right? But right here, you see that not bad at all. The setup is not bad at all. So we entry at 31. Yeah, I mean, look at this. So let's say we reach how much we reach for this trade. We reach, here's our entry stop loss. So we're about 26 cents, right? 26 cents. And how much we gonna we do for our targets? Roughly it's 1-to-2 ratio, right? Yeah. So 52, 26. So yeah, roughly it's 2 cents, 5 cents more than 1-to-2 ratio. Not bad at all. If we are precisely exit from there, right? So that's our short trade right there. So we reach 26 cents and get 57 cents right there. Yep. So here's our node right here. So we have to modify this. It should not, price swing low, so sell liquidity. At what time? $10.28. Our first target is right, first target initial target, I mean. And it not reach 930 yet, so open 0930. How about better target is swing low at 1034? Is that right? No, 1028. And then the risk reward ratio for us is going to be 1 to 2. So basically you risk about 26 cents and you gain about 57 cents right there, right? However, we're gonna see a good setup right here. What do we see? Make a lower low right there, take buy side liquidity, then we can engage long right here. So we can basically go here. So you see the order block, huge displacement fair gap. Here's your retest right there. So I think I did denote that setup. Yes, right here. I need to notice it when it's so basically it's happened around 54, and then we recognize that when it's 30. So basically right now we are 30 minutes delay. So our goal, we need to improve our reading the charge or reading the liquidity in real time. So right now 30, when we work our ways, we will improve the delay to, let's say 30 right now, right? And then we learn and we improve, we gain experience, we anticipate, we head into, then we can improve to, let's say 30 minutes, 30, you go to 20 minutes and go to 10 minutes to 5 minutes. And then you can read the patterns, the draw on liquidity in real time right there. Then we're good to go from there. So it just take practice, take patience and practice. That's it. So, the trade by Excel is not a rocket science. It just need a right mindset and a little bit patient, a little bit. I would say a lot of patience instead of a little patient right there. Just try to be optimistic. Lots of patience. How about that? Lots of patience and practice. A lot of practice. So you see right here is order block, fair gap right there, retest. So it's a long setup right there. Because we just see a intermediate sell side like we were taken right there. So entry is about 10:54. It's about right time right there. And our target gonna be the buy side liquidity. However, if we possible, we can trail our stop loss. We can trail at the bullish breaker here, and then we stay in the trade. Still stay in the trade and look how far it go. It go huge. You see, it go huge all the way to here. So how much we instead of exit here, right at the level, we are gain another 80 cents more. Wow, that's huge right there. Go 80 cents more. So if we go from here, right, we enter around here, right? So 66 cents plus 80 something. So it's almost $1.50 is right there. And how much you reach? And then we reach right here into this order block, right? Beautiful. So we reach about 30 cents and we got $1.50. So it's 1 to 5 reward ratio right there. 1 to 5 risk reward ratio right there. Wow, you see that? And the reason why it go down here, because look at the look at a 1 hour time frame. That's where it heading to, and it's surprised. It surprised you. Usually it head all the way to this order block, and it go past this bearish breaker right there. Not really, but it's almost right there. So in our initial documentation, initial setup, right, we put right here the target is very conservative right there. However, if we want to take a more, you know, risk, not risky at all, because it's a break-even trade, right? As soon as you go right here, it move up here at line. You see it move up here. It retest one more. So this trade is from break-even to profit. So if we are a little bit aggressive, I would say, then we have a big move up there. So we denote right here. For this trade, right, I think the better targets would say the bearish breaker 1 hour time frame, or also the bearish order block 1 hour time frame right there. Yep. And what's it the time? 11:42. Yep, 11:42. Exit time should be around 11:42. Yes. And the risk reward ratio is fabulous. So it's about 1 to 5, right? Basically, you risk about 27 cents. Let go up to 30 cents, and you get $1.50. So good reward, right? Good risk to reward ratio right there. And here's another beautiful trade we set up. We identify right here, right? We put two vertical line right here to identify it's a long time, right? Long time, and we're going to see what is show up first. And you see right there, start at the long time. You see a huge, you know, you see the order block and a huge displacement, and then follow up right there. See that? That's the follow up we are looking for. And look at that. It go back to retest that order block at 12:30, perfect time to go in for entry right there, right? Follow up, retest, and you know how much we reach? Look at that. We enter right here 62, and we go 68. Just we only reach 6 cents. Can you believe that? And if you want, you put a stop loss, left us 5 cents above that, so you reach 13 cents, and you know how much you got out there. Let's say you set target at 9:30. Look at that. You see $1.76, and you reach, I don't know, less than 20 cents. So you can see that it's like 1 to 8 risk to reward ratio right there. yeah, 1 to 10. I mean, I do the calculate right there. 15, yeah, you reach only 50 cents, 15 cents, and you gain $1.76. That's the setup that we annotate right here. You see, so entering targets, blocks, the risk to reward ratio is huge. That's a beautiful trade. That next time we train our brain right now, train our eyeball to see it. Right now we see after the facts, and like I said, 30-minute delay. But eventually we go to 20 minutes, 10-minute delay, 5-minute delay, and then boom, real time with the event setup. Then we become pro right there. Right, yeah, that setup I want to point out real quick right there. And then from there it's bounced back, but it's very hard to enter. That's why you see the auto block, fatal gap, but there's no retest for you to entry. But that's amazing right there. So forget about this leg up. There's no way for you to go in at all. There's no entry for us at all. Okay, that's all the setup that we can think of for today price action. So it turned out that let's take a look at the 4-hour time frame so we can wrap up this week. Yeah, let's delete all this, get out of the way. Delete this and go to 4-hour. Yeah, remove this for now. Also remove the long time. We're done with the low time frame right now. Take a look overall, see what's going on. Okay, we're good for now. So basically we see that the Monday is, we thought that the Monday will be the low of the week, and then is and then Wednesday retest that, and we thought that, you know, it fit our weekly profile by Wednesday, and Tuesday we know this is the high of the day, or I mean sorry, the high of the week and the low of the week right here, right? As we see this swing, right? So we by Wednesday we believe, you know, we anticipate this is the low of the week. Let's say it go up, right? We see it go up, maybe pull back right here and a bullish breaker and continue to go up. But you know, the market surprise us, so get ready for the surprise. And it come down to check the low of Wednesday, and also come all the way down, check the low of the Monday also. You see that? Yeah, check out on Monday. but they haven't taken out a low of the Thursday the week before that. So basically the profile right here for this week is what Thursday is the low of the week. So in this case, our DR model for the week is violate, it take out the high of the week and also the low of the week. Because the DR model for the weekly profile, you know, we state that by Wednesday, we know the high of the week and low of the week. But in this week, it's swing in both ends, so it's violate right there. But it fit into profile that Thursday is reversal, right? So basically Monday, Wednesday, Tuesday, Wednesday go up, and then Thursday is just reversal. It go back, so it fit into the weekly profile of Thursday reversal. You can see that in the ICT video. He did mention about that. And basically on the Friday, which is today, it just still within this range, so not external liquidity. Yes, it's still internal liquidity right there. Next weeks, we have any special new? Let me see. Any impact? So this week is huge, right? This FOMC meeting is only volatile. I need to go back and look to see how the liquidity run of price action last week. So we don't have much. Oh yeah, next week we have non-farm payroll next Friday. So that's the high impact news right there. But you look at this, it's the inside bar pattern. So next Monday we see break through this, and then we can take appropriate action. I think, I mean, look at the, do have a weekly open, the weekly charge open, or let me check real quick. Yeah, right here. This is our week of 30, and you see that actually for this week, the week of 30, the high and low range is $90, but I think let's maximize this. It's just a 5 year. Let's maximize it. So we have more data and our statistics will be more accurate. So the average is $5, and this week is $7.80 something. So it's quite above the average range for this week. See, let's, you know what? Let's clear off this. Help us to see better. Yeah, see better now, right? So we close this week with a up close candle, right? So it's around this area right here. It detects the buy sell liquidity of this week in April last year. However, it's not take out of this bullish breaker, yes. But I will see right here. Wow, not touch that. This is a already. Oh, is it a mid range of this one? You see this candle? This is a swing low, and this is a bearish breaker. You see, after that you have a setup right here, bearish breaker, fair value gap right there, and then retest of that going down. So I think this is a key level for us to watch next week. See if it stay in this range. How bright? We want to see how the price action or how the algorithm run react to this level for next week. All right, that's our weekly right there. See that? That's the level we're gonna watch. See if you're gonna come down. Right. The first reaction is it tests. You see the huge, a very sharp move right there, and I believe it's gonna come down sharp, right? Because it come when it rolls sharp right there, it will come out very sharp. It doesn't need let's say conservative echo here, right? Because it's the bearish, the bullish breaker right here. So let's retest right there. That's our scenario right there. Anyway, I think time's up. Thank you. Have a good weekend, and talk to you later. Bye for now.